The stakeholders have until Friday to submit written comments to the energy regulator, Nersa, on Eskom tariff that may increase by over 40%. Joining us now to assess the implications of this on consumers and the economy, energy expert and CEO at Sinan Energy, Mohammed Mahdi, and Thomas Ghana, as well as economist Sfiso Skenjane. Gentlemen, good to have you with us. Thank you very much for joining us on In Focus. I'm reading here, Thomas, to start with you, that there are two scenarios of the latest pro forma implementation plans by Nersa. One scenario showing an average increase of 40.38%, another one of 41.18%, depending, they're saying, on whether 3.461 billion regulatory clearing account balance arising from the 2019-2020 tariff is clawed back over 1 or 2 years. It sounds like gibberish. I have no idea what they've just said. Let's explain that in simple terms. What is Nersa saying there?
Yeah, Tabu, thanks for that. I mean, you get the MYPD, or the multi-year price determination model, and part of that you've got an RCA, or a regulatory clearing account, which Eskom can, after the fact, actually go back to Nersa and say, we spend the money responsibly, and we, for instance, overrun with open cycle gas turbine operations in terms of diesel use, and therefore we need to recover that cost. And then Nersa will apply their mind whether that money was spent responsibly, and if so, they could then give Eskom that money in that increase in the next while. And then they can decide whether it's over 1 year, 2 years, 3 years, or whatever. And that will obviously make an impact of how much the increase will be. Suffice to say that whether it's 40 point something or 41 point something, it is a massive increase.
Absolute massive increase, and this is an increase that will be applicable, Mohammed, to standard consumers, including here most power users. However, I believe there are certain limitations, or there's a limited number of large users who have special arrangements, and they will not be affected by this. One would think the standard customers are the ones that should actually get some kind of special pricing arrangement in place, and the large users who clearly make money out of it should be the ones bearing the load of this 40% increase.
Hi, so yeah, look, these special users comprise between 6 and 7% of Eskom's revenue base. They will also experience an increase in the tariff. They don't have a standard tariff, so they have tariffs that are part of an agreement that's been reached a while ago, and so their specific tariff structure is different. However, the increases still apply to them, so it's not as if they won't get that increase. The actual increase also, just to put it in perspective so that we understand, if you take out the government funding component, which is, estimated to be around 23 billion. When I say estimated, that's one entity, or that's sort of the view right now. If you take that out, then the rest of that increase has to be borne by the consumers, by the end users. That works out to around between 27 and 32% if you're looking at just standard clients, or if you're looking at these special groups as well. So it's between 27 and 32% in that case, and it's still a huge number.
Yeah.
You put that in perspective. I mean, companies that normally want or show a revenue increase of 25, 30% is due to great performance. Eskom is asking for a revenue increase because of poor performance, effectively.
Sfiso, I mean, ultimately, nevertheless, whatever the increase will be, the end user will feel the pinch directly, but also indirectly, as of course we're seeing a whole lot of increases that will be coming in from all sorts of other areas as far as, for example, food and transport is concerned.
Oh, absolutely, Tabo. I mean, when we look at household expenditure numbers, household utilities actually now make up the largest portion of that expenditure basket. And then, of course, what follows is then food and transport, right? Some of the lowest earning households in South Africa, they can spend up to about as much as 30% of their earnings on transport. And of course, we've seen also pressure point coming from a food inflation point of view already coming through that. We see that we are aware of that, of course, that when oil prices contribute about 25% to headline inflation numbers in the country. And so I think simply when you're looking at then, household utilities and also how they contribute to overall inflation numbers, I think that's a big pressure point for households. And I think certainly also from an inflation point of view, creates a new pressure point. We're already seeing the Reserve Bank looking at additional opportunities to create some cooling effect in terms of where they're looking at, the price journey or the price path of inflation in South Africa. And so when all of these inflationary items come into our household baskets, I think it certainly creates a tough-looking picture, particularly in the first quarter of the year.
Yeah. Is this something that's going to, in a sense, spook the Reserve Bank, and what will be the impact of that?
Yeah, I mean, if you remember the last statement from the Reserve Bank, they did say that inflation expectations in the short term are on the upside in terms of the risk. And that was largely on the back of expectations from oil and food. And now you've also got electricity prices continuing to be a massive pressure point there. And transport also is in pretty much filtering into that household basket. And so I think one of the things that they made particular emphasis is around that price path, and simply that their role and their mandate is first and foremost price stability in the context of sustainable economic growth. And so all the economic growth considerations that they're looking at are, of course, I think a little bit of a secondary picture. In addition to that, we're seeing already in the US that the federal government there, or federal bank rather, is started tapering off their bond buying, which means that they're expecting inflation to be on the upside. And that also then usually becomes one of the things that our Reserve Bank looks at when they're thinking about interest rates.
Yeah. Thomas, if you ask government, they'll tell you that Eskom is too big to fail. If you ask business, they'll say, we can have maybe a price increase, but at least as long as we have a guarantee that we are going to get consistent electricity supply. And I suppose even the rest of South Africa to say, can we asking for this increase? Are we going to be getting what we are asking for, that at least our lights don't go off 4 hours a day or maybe 6 hours in some instances? Does the fact that the Eskom might get this increase mean that the consumers will also get what they are asking for?
Oh, unfortunately, not at all. And the reality is that the coal fleet is old and it's aging still. We've seen today that the electricity availability factor went down from 64.7% in 2020 to 61.7% in 2021. Now remember, at this stage, Kuberg is going out of service for replacement of steam generators. Medupi Unit 3 is blown up, and that is out of service. Luckily, some of the Medupi units or Kusile has come in over the Christmas season, so that balances it out. But let's just look at it at 61.7% electricity availability factor, way too low. The target in terms of this MYPD is 72%. So we can expect lots of load shedding in 2022 as well. But I must say, it is not only Eskom's fault, and I must point a finger to Nersa here as well. Yeah, even since 2012, 2013, I can remember saying that Eskom need higher increases than they've been given by Nersa. It's the proverbial can being kicked down into the future by Nersa. And it's also a lack of proactive regulation as a result of the changes in the electricity industry. So Nersa has just not kept up with the times. They haven't proactively regulated the changes in terms of technology and the changes in the industry. So our MYPD way of determining increases for Eskom is completely outdated. And that's why Nersa tried to stop it by not allowing Eskom to submit the MYPD. The courts then stepped in and said, but Nersa, if you haven't created a new regime, so how can you just not allow that? So it is again something where I believe it's still a function of state capture, still a function of where the the state-owned entities and the Chapter 9 bodies and all of these that were captured didn't do their jobs. And now we sit with the challenges, and we're going to have to fix that over the next few years. And one of those fixes are going to be increased electricity tariffs to enable us to save Eskom, unbundle it, and make sure we've got stable electricity supply.
Yeah.
We won't get stable electricity supply in the next 3 or 4 years, only after that.
Now, Mohammed, all of this is very confusing to electricity users, but what is important here is that we need to engage with these facts. As I mentioned, that the end user ultimately will need to make submissions by Friday. So what do we need to thoroughly interrogate here as far as this tariff application?
I think the important thing is to take a step back, and it's quite easy if you look in the media, if you look at most commentators, getting involved and bogged down in the detail, what's the RCA and what's the percentage and what's the exact allocation and so on. But if you just step back a little bit, I agree with some of what was said earlier around Nersa. However, the problem is that not Nersa is outdated, but Eskom is outdated. And Eskom is going to be increasingly more outdated. Eskom, in my opinion, so to answer your question, we need to slowly but surely reduce Eskom's importance and remove Eskom in its current form from the equation completely. That means unbundling Eskom. That means regulatory changes, as has been mentioned as well, but quite dramatic regulatory changes and quite quickly. So these are the changes that are needed. Otherwise, we're going to keep having the band-aid approach, Nersa trying to put in place certain tariffs, Eskom becoming increasingly unproductive and increasingly a burden. So people are fond of saying Eskom is too big to fail. Actually, Eskom is too big, full stop. Eskom needs to be made smaller, needs to be taken out of the equation, and you need to have alternative sources coming into the picture. You see, the fundamental anomaly is that we are raising prices for a coal-fired fleet. Now, when you think about it, one of the only rationales for keeping coal-fired power in parts of the world where it's still the dominant power path going forward is the lower price. But in this case, in this country, we have a higher price of coal, and it's still coal-fired. So there's no rationale for that whatsoever. We need to change that entire narrative in terms of what our energy mix is and how we slowly get Eskom out of the equation in its current form.
As here are energy experts Mohammed Mahdi and Thomas Garner. We also have economist Sfiso Skenjana with us, of course, talking about the latest tariff hikes by Eskom, public having up until Friday to make their comments to Nersa on that price increase. Sfiso, how important is the sustainability and efficiency of Eskom to the reconstruction and recovery plan that once again we heard was a priority for the ANC this past weekend?
Yeah, I mean, it was definitely one of the big things that they listed there in that economic strategy document, really around ensuring that we've got a good base load in terms of electricity. And I think, just to the point, a number of points that Mohammed made there, I think was quite interesting around, which I think I hold a slightly different position, is that when you look at organizations like Eskom, particularly utilities, is that the kind of investment that is required for them to exist is too high. And often you require them to be vertically integrated monopolies, which means that you need them to have your primary generation and transmission for them to actually be able to deliver to consumers at the lowest affordable cost, irrespective of the source of energy that they actually use, and so not just coal, even if it was gas. Second issue is that Thomas actually made the example or gave us the data around kind of energy availability factor for last year. It's now dropped to about 61%. What happens with alternative energy is that it actually doesn't increase your base load. And so, and because it is erratic and we don't have the right levels of lithium in our country and investment in that space to be able to store that energy. So alternative energy doesn't help the base load challenges that Eskom is going through. The third thing there is exactly what we're seeing, is that even with the alternative energy guys coming in, is the government is still, through the repurchase agreements, actually guaranteeing to buy the energy from them. And so you probably want the energy mix to exist within Eskom and not unbundle Eskom, because it's actually economically unsound to do that. We've seen countries who try to do that, and they saw big surges in electricity prices beyond what we're currently seeing. Germany will tell you a very big story around that as well. And the last point that I wanted to make is that Thomas made a very interesting point around the issue is that using the current multi-year price determination model, Eskom's model or mandate is one, developmental, and then two, economic enablement. And they're required to, in essence, recover their costs. And so that's what we talk about, the localized cost of energy, and then have a little bit of that to be able to invest in maintenance and new plant as well. And what's happened in the past is that Eskom actually never got to the right LCOE, or the localized cost of energy. And so they were always going to under-recover any revenue from a revenue point of view. And they were getting what we call a negative Jaws effect, where your revenue is not growing at the same rate at which your cost is growing. And this is how Eskom also finds itself there. So to ask the answer, really the question is that, one, I think we need a bundled Eskom, a vertically integrated monopoly for the end consumer in this country. And because also the cost of investment in utilities is actually quite high. And I think that's one of the things that we really need to be quite considerate about as we think about Eskom.
I expect Mohammed to want to come in there, quite strongly even. I tell you why, it's also something that was said by the Chief Financial Officer at Eskom. I mean, of course, there are other issues that all contribute to the tariff hike, but he's pointing out that the cost of procuring electricity from independent power producers is also a factor that is driving the higher tariffs.
Yeah, so again, we're procuring power from independent power producers in a centralized model. So we're getting these producers to sell to Eskom. That is not the solution. And we're ignoring the fact that centralization is certainly not the path forward for energy. The prices and the costs of maintaining a vertically integrated monopoly that Sifiso speaks about, that's 5-10 years ago technology. Where technology is going now is absolutely not in that direction. There's an inevitable trend to decentralization. There's an inevitable trend to technologies, clean energies that provide baseload power. So the kinds of arguments that have just been made, have been made for several years and quite a long time ago, and it's simply not true to say that alternative energies, with the right transition, gas, for example, as part of their transition mix, can provide baseload power. The other thing is there are a host of energy storage technologies, not just lithium ion. Lithium ion is one of the most expensive, and it's not the only one. And when you start looking at utility scale storage, there's a host of alternative storage mechanisms that are available and that are planned to become available over the next few years. But let me give you probably the most important point.
Hold on. If before you come to that, I want just to answer to what you're saying. Yes, there are new and cheaper technologies available now, but they are arguing that Eskom has signed contracts with the renewable power producers with the much expensive technology of yesteryear.
Sure. So, much more expensive tariffs, not necessarily just the technology, but much more expensive tariffs. That's a problem of the contracts that were entered into. It's not a problem of the existing technology, and it's certainly not a problem facing a new user or a current user who sits there in his factory or in his business and he wants new power and he doesn't want to go to Eskom. And the interesting thing is he can get cheaper power from the private sector and he can get baseload power. And guess what? He can actually get it built and delivered on his site. He doesn't need the high transmission. He doesn't need the high distribution costs or any of that. So that's possible. It's been done, and we've done it multiple times. But let me just point out the thing that's really critical to understand about Eskom. We have this illusion that Eskom can continue and will be able to continue for the next 10, 15, 20, 25 years with its current fleet. The simple reality is, and I used to be, chief executive of a global engineering company in the past. I've dealt with most of the countries and companies that Sifiso speaks about and advised most of those governments. The fact is that big equipment suppliers, big manufacturers are closing down their coal divisions. Expertise in coal is dying out. 10 years from now, it's going to be very, very difficult to get the kind of expertise that's been available 10 years ago to maintain coal-fired power plants. So there's a whole supply chain that is currently eroding and that is moving to where the market is moving. That supply chain is not going to be available to Eskom in the future. Similarly, equipment, maintenance, equipment parts, all of that for coal-fired power plants are not going to be as available and certainly going to be a lot more expensive. So this is the hidden aspect, the technical side that people don't often understand. So Eskom is not able to continue in its current mode in any way that is going to be feasible looking into the future.
So decentralization is saying, Mohammed, is the future. I'll come to Sfiso to respond to that, but quick one from you, Thomas. I mean, to your mind, with the three factors in mind, the operational cost, the debt capital costs, and the IP procurement costs, will Eskom be able to justify this tariff increase?
Well, I think they definitely, if you look at the NYPT application, I mean, they've done thorough work. But I want to agree with Mohammed. And I mean, the challenge is Eskom in its current form doesn't have the right to exist. And it doesn't have, it shouldn't try and keep its coal fleet alive. What Eskom should do and what the South African energy industry should do is to try and leapfrog our European counterparts that have paid a lot of money to get renewable energy where it is now. And we can just leapfrog that by really coming to install lots of wind and solar as per our integrated resource plan, as well as battery storage and other storage modes that Mohammed has mentioned. For every megawatt hour of electricity that we install newly, solar, wind and battery storage will be cheaper than the current fleet. Simple as that. So if you look at the future, the more we install new technology, the cheaper our energy mix would become. And I also agree with Mohammed that we don't have to sell energy to Eskom. We can sell energy to end users. In that case, National Treasury doesn't have to stand for government guarantees and sovereign guarantees behind these PPAs. Business can sort it out themselves. And in that way, we can give breathing space for Eskom to, in an orderly and planned manner, retire their coal fleet.
All right.
So it's absolutely what we need to do, and I do not understand why we still talk about this myth of baseload. Baseload is a myth. We can supply from solar, wind, and storage, pump storage, battery storage, gravity storage, all the other modes. We can supply the amount of energy that we need 24/7, 365, and it will be cheaper than the current form.
Well, there you are. Sfiso, on one end to say, let's decentralize. That's the way of the future. Let consumers go to the private sector, get the electricity themselves, and then you'll have the other one saying, well, we'll completely destroy this state-owned entity going that route.
So the conversation is certainly about energy mix. I think that's the first conversation, and I'm not against Eskom diversifying its energy mix over time. I think you've got to do a sustainable transition for that organization to be able to get to a sustainable energy mix, and I think that's the starting point. The second point that I wanted to make is that alternative energy right now, at a marginal cost of a kilowatt hour, yes, is lower, but the average cost is still above the localized cost of energy. And so this is the point you were making around the cost at which we're procuring energy in today's context, in a declining economic context, is actually incredibly onerous, both for industry as well as for households. And so when we want to transition our energy mix, we've got to be responsive also to the cost pressures that we're currently seeing, up until even the average cost of that alternative energy comes down below the localized cost of energy. I think that's not something that happens overnight. We've got to transition that. And the point I was making is that I think the transition, the energy mix itself, needs to happen within the enterprise and not outside of the enterprise. Because what's already happening, if you look at the economy right now, is that we're getting all these alternative producers selling back into the mix, right? And that's actually layering the costs even further. And the point Mohammed was making is that if you decentralize it, you solve it. But once you put the energy availability back to private sector, all it does is that you create a free marketplace that actually we already see in South Africa, that we've got some of the highest Herfindahl indices in the world, and also some of the highest anti-competitive behavior. And so private sector doesn't always behave correctly, particularly in the favor of households. And we can't always think that the silver bullet is decentralization or unbundling or privatization. And I think we've got to take a more pragmatic approach in how we think about a sustainable solution for the energy challenge in South Africa.
All right, gentlemen, let's leave it there for tonight. I appreciate all your interventions and your input, Mohammed and Thomas, as well as Sfisos Kenja.